Hello and welcome, everyone, to another primetime edition of Swan Signal Live. We're here with what has become a classic pairing, Preston Pysh and Andy Edstrom. Before we dive in, a quick word about the sponsor and producer of this podcast, Swan Bitcoin at swanbitcoin.com. Swan is the best way, the single best way to accumulate Bitcoin in the United States. We are iterating on this product, making it easier and simpler every day. Jan Pritzker and his squad have a goal to make Swan the easiest and the fastest way to go from zero to Bitcoin in a few minutes. So we want to beat all the other on-ramps and make it as fast as possible for you to go from zero to Bitcoin. But not only that, we want to make it as easy as possible for you to start accumulating Bitcoin on a regular basis. So you can set up an automatic recurring buy plan, pick a percentage of your paycheck and get paid in Bitcoin. 10%, 20%, whatever it is, every paycheck, get paid in Bitcoin. Automatically convert it. We pull that money straight from your bank account, whatever that percentage of your paycheck is, and we convert it to Bitcoin. And then you can automatically withdraw that Bitcoin if you would like to hold your own private keys, which we do suggest when you are ready, and we will help you hold those keys or learn how to hold them along that process. And all of you Swan members have been buying up this dip, all right? We went up to like 42K. We went down to like whatever it was, 30, 31, 32. And Swan members are savvy. It's so great to watch the numbers come in. You all have been buying this dip in earnest. We have strong hands on the Swan squad. Our instant buy volume is way up. We're seeing members increase their purchasing plans, and we're seeing a lot of wires come in. We can take wires from $10,000 up to $10 million. We are seeing some Giga Chad wires coming into Swan, and we are also supporting the new narrative of this cycle, kicked off by our friend Michael Saylor at MicroStrategy, Swan Treasury. You can email treasury@swanbitcoin.com, and we will help onboard your entity, your corporate entity, and get you stacking some of these sweet sats, move you to a Bitcoin standard. And Swan is a Bitcoin-only company, as we've been talking about, and therefore we can, have much lower fees. We're a leaner operation. We're not supporting a whole bunch of altcoins that require a lot of overhead and engineering and support departments. So we have fees that are 60 to 80% lower than Coinbase. So get off Coinbase, get on Swan. We're crushing them on every front. There's no reason for you to be on Coinbase anymore. No reason for you to suggest Coinbase to any of your friends and family. Bring them to Swan. We'll get them onboarded and we'll teach them what's really going on here. That Bitcoin is the only player on the global stage in the monetary department. So, of course, we are focused, like I just mentioned here, on Bitcoin education. We're here at this show right now on Swan Signal Live. We've got Preston Pysh and Andy Edstrom with us here for episode 46 of Swan Signal Live. And I'd just like to point out Preston Pysh. Let's go ahead and bring our guests up on the screen, Breck. Preston Pysh is now the all-time leader in terms of Swan Signal Live appearances at 5. 5 out of the 46 episodes have featured this man. He was, until tonight, tied with Lynn Alden. So you're in good company, Preston.
Yes, I am. Big fan of him.
Yeah, and this is Andy and Preston's first episode together. Of course, Preston hosts the Investors Podcast Network.
Third episode. You said first episode.
Did I say first?
Yes, you did.
I was definitely thinking third. I don't know why first came out. Yes, third episode together, becoming a classic pairing, and for good reason. The fans love this pairing, and I certainly have a lot of fun with you guys doing these prime time. They're special episodes for me. Preston is host of the Investors Podcast Network. There's several podcasts on that network. He hosts one of them along with Stieg, and he is also doing a Bitcoin-focused podcast now. Is that right, Preston? Dropping those on Wednesdays?
Yep, on Wednesdays.
And they've been fantastic. Just fantastic must listen Bitcoin podcast. Bump those right to the top of your rotation, your weekly podcast addiction rotation if you're like me. And Andy is a financial advisor and author of Why Buy Bitcoin. Andy, how's it going tonight, man?
Oh, man, I'm having such fun. By the way, I want to underscore, definitely listen. I mean, everybody listening to this pod is already listening to Preston's pod, but if you're not, definitely listen. Great content. He's had already several of the greats on, and there's going to be more. So, but how am I doing? I mean, if you're in Bitcoin and you're not having fun right now, I don't know what you're doing. What else could I say?
Right. It's going to be a fun year, man. I mean, it kicked off in earnest last year. Just the second half of 2020 was just shockingly fun. Day after day, week after week, we had this bullish news. And I think this economic reaction to the pandemic really pulled things forward. And so this bull run got started a little earlier than it otherwise probably would have. And we have a lot to look forward to in the Bitcoin scene in 2021. Now, we have a new federal administration coming in, and on the state levels as well. Tomorrow, a new president will be sworn in. And I'd love to just kick off, since it's so timely, a discussion about what we can expect in terms of policy measures and in terms of appointments to federal agencies that the heads of federal agencies that will affect Bitcoin and our economy. What can we look forward to? Who wants to take that? Andy, you want to kick off with that one?
Sure, why not?
Let's
I think the story is still being written, but we know a few things. We know that Brian Brooks is moving on to better things, and it would have been hard to come up with a more friendly regulator than now former controller of the currency, Brian Brooks. Of course, he had been at Coinbase prior, and so sometimes the revolving door in government actually works in your favor. This was one of those. This is one of those cases for us here in Bitcoin. So that's one. It'd be a shame to see him go, but on the other hand, he got a lot of really important stuff done. Not least, the guidance that made it explicit the banks could custody and use Bitcoin. So that's huge. Gary Gensler is coming in. It seems that he knows and understands Bitcoin and crypto. He's been one of those guys, like some of the rest of us, who've been pointing out that Ripple is a security for a pretty long time now. And it'll be interesting. He seems to know what he's talking about, seems to know what he's doing. And, it's not, as we know, in Bitcoin, there's only one quote unquote crypto asset or digital asset that is unambiguously not a security, and that's Bitcoin. And every one of the other ones, maybe with some rare exceptions of tiny coins that were fair launch, mined coins, which are basically specks of dust that are insignificant. With the exception of those, Bitcoin's the only one that's not a security. So it'll be interesting to see what cases he brings, what cases he continues, and I think I'll leave it at that and hand it off.
Well, and I think you want to add that Gensler used to teach the class at MIT on how Bitcoin works. I mean, there's like a whole lecture series of him teaching at MIT, and he's coming in to be the chairman of the SEC. So, today's a perfect day for people that listen to Janet Yellen say her little bit about we've got to stop people from using cryptocurrencies for illicit purposes. And then everyone gets scared and they're like, oh my God, this is terrible because she's going to be the new Treasury Secretary. But they never talk about the other side of the other people that are getting put into place, like the SEC chairman who used to teach this stuff at MIT. And it's just, there's so much entrenchment. I think that's the thing that I would say to people is the amount of entrenchment that has happened, not just in the US, but globally, is just, you just can't wrap your head around it. Like if you go back to 2017 when we were in the bull run, you didn't have anything like this level of entrenchment that we have right now. The people that are being pulled out of places like Coinbase, and then, I mean, it's nuts. You look at the derivatives market that's built up around all this. I mean, it's just, if people think they're going to turn this off at this point, the news that came out where banks can now use blockchain technology in order to conduct clearance operations between banks. I mean, these announcements are accommodative to the technology. And when you look at how competitive this space is about to become, and you're looking at a lot of the key decision makers in government and also in industry that are seeing the direction that this is all going, and you look at in the US and the UK how finance has been an enormous part of industry, a part of GDP. I think there's a lot of smart people in both regions in the UK and the United States that are looking at this and saying, we better make some good sound decisions here. We're going to be left in the dust compared to some other places that are Singapore, for example, that are way out in front of all this technology that's emerging. So yeah, I'm with Andy. There's a lot of announcements now with respect to the change in policy that you're going to see with the new administration. You know, I just don't really see too much change, to be honest with you. And I think that would probably surprise a lot of people, considering how much political extremism we've seen on both sides of both parties here in the U.S. at least. As far as the way that they're going to handle this moving forward, I mean, the administration that's leaving, they were extremely accommodative as far as the UBI. I think a lot more than what some people would have thought. That party was trying to push it through. It became this political rift between the two parties, and now that's pretty much over because you got a new administration coming in, they're going to aggressively try to do more UBI. I just kind of suspect that the printing is just going to, continue to accelerate, like everybody who's listening to this already knows. I'm not saying anything that anyone doesn't already know. I just don't see any of that changing now that there's a new administration and party coming into power.
Can I key off just a couple things real fast? So I agree with Preston completely. With regard to Preston's point about, hey, they're going to keep printing more money. I just read a report that came out of BCA, the Bank Credit Analyst, which is this macro analysis firm that's been around for 40 plus years. And what they did a survey recently, and the survey pointed out exactly what Preston said, which is you look at the Democrat side and you look at the Republican side, and if there's one thing they agree on, and I'm talking about a survey of the populace, like the average voter, what is your priorities, basically for the government? Both sides are saying print more money, get more stimulus into people's hands is their priority, their political priority. So that's, item one. So there's a clear political popular impetus to keep doing that, keep stimulating, keep running deficits, keep monetizing those deficits. And then I want to go back to the Janet Yellen comment, as well as the Christine Lagarde comment, right? The quote unquote funny business that goes on in crypto or Bitcoin. I can't remember if she said crypto or Bitcoin, but Yellen was talking about that stuff too. The facts are on our side. One of the facts that I have in my book is 2018, Bloomberg reported that the DEA 10-person cyber investigative task force had some stats they came out with. And what the stats showed was in 2013, close to 90% of transactions in Bitcoin were quote unquote criminal. Okay. This was like Silk Road era. By the time we got to 2018, it was down to 10%. And then in 2019, there's an interview on Pop's podcast. He interviewed this special agent, DEA special agent Patrick O'Kane, who stated publicly that Bitcoin accounts for 1%. Okay, 1% of Bitcoin transactions are money laundering activity. So when you compare the 1% stat of the quote funny business going on in Bitcoin with the dollar, you got to ask yourself, like, how are we even talking about this? And of course, they're going to jawbone it. They're going to talk about it. But I think the facts are on our side.
I mean, nobody wants to get into the numbers. They just want to spew the narrative. Because as soon as you get into the numbers, like Andy's saying, and the nice thing about a blockchain is it's all pretty much verifiable. As soon as you start doing some analytics, it's really easy to kind of figure out what the numbers are. I mean, no one wants to really get into those conversations. They just want these pie in the sky type narratives that they can spew. And you're seeing that. And what they're not saying, and I think it's important to focus on what they're saying and then what they're not saying. They're not saying we're going to shut this thing down. They're saying we need to figure out a way to stop nefarious activities that are done on these. And so that's what they're really saying. They're not saying, hey, we've got to stop this because this is going to destroy the global economy. They're not saying that. I also found it interesting, Larry Summers, not a fan of the guy, but at the same time, he was a former Treasury Secretary. I mean, this is a guy that was on Epstein's planes and all that kind of stuff. So that's the type of person you're dealing with. But also a president at Harvard and I mean, dialed in at the highest levels of government and he came out this past week with a video saying Bitcoin is not going away, and specifically said Bitcoin. So I think a lot of people in the know or that are dialed into very high levels of government, very high levels of finance, definitely can see the writing on the wall and where some of this is going. They might not have an appreciation for how the protocol works and necessarily what's driving this bull market. I find it hilarious how many people out there on CNBC and all these places are talking about how they're naming some of the buyers and that there's exuberance, and that's the thing that caused what we've seen to date since the halving. Anybody who understands how this protocol functions, we're watching total supply exhaustion in real time, and that's the catalyst. And then what it does is it gets the momentum moving, and then it brings buyers in, and then you're actually combining the supply suffocation with buyers. And I'm of the opinion you're halfway through this move that we've got going on right now as a conservative estimate of what's taking place. And it's funny you don't hear anybody talking about the supply suffocation that's happening.
Yeah, and okay, well, let's get to this, because this is not just a supply suffocation like happened last time, right? Last cycle. This is completely different because we're seeing supply. So what Preston's talking about is every halving, the number of Bitcoin per block is cut in half, right? So now we have before this previous halving, which happened in May of 2020, there were about 1,800 Bitcoin minted per day. Now we're at about 900 Bitcoin minted per day. That decrease in supply, basic economics, law of supply and demand, decrease in supply. Even if demand stays the same, then there's going to be an increase in the price. Demand then starts to, go up because the price goes up, et cetera. And that's the feedback loop. But this time there's some gas on the fire. So if we take a look at this chart from Glassnode here, and shout out to my boy on Twitter, who pulls these together for me. It's Raphael. Shout out to Raphael on Twitter, Neocortex with a 3 instead of an E. So shout out. He's been posting these, and this is really interesting, right? So if you look at January 2017, this is the cycle where we started going up last time, started going parabolic. Well, when we started going parabolic on the last run, the number of Bitcoins on the exchanges started going up in tandem with the parabolic price rise. Here, we're seeing the opposite happen. We're starting to see the parabolic price rise, and we're seeing coins being taken off exchanges. And so that is something that we haven't seen before, and I think it's something that we should definitely talk about now.
Brady, put that chart back up because I want to talk about something specifically. So when you go back and you look at the coins coming off the exchanges on the previous bull run there at the start, and you look at the slope of that, and then you compare it to this bull run and you look at the slope of it, you're at a completely different rate of supply suffocation happening this round compared to the previous one. When you look at, and I like to look at these 4-year cycles as fractals. When you look at the previous 4-year cycle and the percent gain that had happened, call it 35,000 blocks into post halving, kind of where we're at right now, the move has been much more aggressive from a percent gain standpoint from the halving to where we're at right now. So I would attribute that to what you're seeing here on this chart, as far as the amount of supply it's going into deep storage, it's coming off the market. And if those coins aren't there on the market to be traded, well, guess what? That has an impact on the price action. So if we continue to see that slope play out, my expectation is that you're going to see the slope of the price action probably continue in a pretty similar manner And because my big concern at this point is that we've gotten ahead of it relative to where we were at on the previous 4-year cycle.
Yeah.
It doesn't mean that you're going to see the correction. It's just if you would see the price go down to 30,000 again, would it surprise me? No. Is it moving out a whole lot faster than I anticipated at that time of the halving? Absolutely. But when you're looking at that chart that you just shared, I think it reinforces the idea that the price action we've kind of seen to date, the speed of it being faster, kind of implies that may continue. But we'll see. We'll see what happens because it eventually flattened out.
Yeah, and you can think about, what would be the logical reason for that, which is, you look at a Mass Mutual, you look at an insurance company or any institutional investor that has a multi-decade time horizon. These guys are not buying this stuff to trade it.
That's why they're not leaving it on exchanges.
Well,
I mean, look at 2017. Number of coins on exchanges going right up with the price because people are just buying it and leaving it on the exchange.
But here's
ostensibly to sell.
Here's what's different. 2017, we had no clue what this what was going to play out, what these cycles would do. I mean, we had the halving, the price started to run again. We're like, hey, maybe this is like a pattern. Maybe this happens. No one had an idea how to price it. I mean, at the end of 2017, Trace Mayer was talking about using a multiple over the 200-day moving average. I went and I, plotted it out statistically. And we started posting that and we're saying, okay, well, this looks kind of like a 3 standard deviation, even though we're not dealing with normally distributed data. We'll call that 3 standard deviations. And this is probably a point where maybe it's going to start having a correction in a major way. But we had no clue back then. We just didn't have, not that we have that much better of a clue now, but I think a lot of people are looking at it now and they're saying, hey, there's something to be said about the scarcity of this. There's something to be said about people that are so deep in the money that there's no way they're going to be able to spend all that in their lifetimes. And if the price is super volatile after they had a 10,000% return, well, so what, right? I just don't care. If it goes down 30% and I made 300% last year, it's kind of like big deal. Who cares? So that institutional interest that Andy's talking about, I think is a huge piece because they're looking at this and they're saying, all right, I think I understand some of the math, the quote unquote math on this. It's a scarce thing. I'm going to buy this. I'm going to put it on my corporate treasury, retained earnings. I don't need this money. It would normally go into some type of marketable security. Therefore, I'm going to hold it for a 10-year, 20-year horizon. And they're just sitting through the volatility and it doesn't shake them out even in the least bit.
Yep. Amen. Yeah. Look, I'm in this boat myself, right? And I have to be careful about what I say about actions internally at my firm. But the conversation I've had with my partners in the past is they've watched the price rise, especially in this latest rally, and they're saying, "Oh, isn't it getting ahead of itself? Like, isn't it a high multiple of the 200-day moving average?" Or, as Preston pointed out, isn't it ahead of what the model would suggest? Shouldn't we trim the position? And I'm like, well, I mean, in taxable accounts, that's a consideration. You have to be really right to sell in a taxable account and then rebuy at a low enough price that you outweigh basically the loss in taxes. You have to be really right. Very hard to do. And then B is like, well, but if I get shaken out of my position, that's the worst. That's the worst possible scenario. And so, just from my own personal perspective, yeah, the way I look at this is, could I be a hero and trade it, and pick off, I don't know, a 10% or 15%, swing? You're never going to pick off the full, we had this 28% correction recently. You're never going to be so brilliant that you get it exactly right and you capture that whole spread. You'll be lucky to capture half of it if you're a good trader. And then less taxes, and then less the risk that, this cycle is just going to be accelerated because of the institutional money piling in. You just say, I'd rather hodl, I'd rather DCA, I'd rather take my position and hold it and ride it out for a period of years.
Yeah, 100% agree. I mean, Preston, do you recommend or do you think that that's the best case, the best way for people to approach investing in Bitcoin, just for the 99% who aren't, traders able to operate in a 24/7 global market?
The thing that I would tell anybody that's trying to trade it is I just ask them, well, what if $1 billion type person steps into the market in the next 5 minutes and starts buying, right? You can do all sorts of pattern analysis on the charts. You say, oh, this looks like a whatever. And sometimes that works and sometimes it doesn't. I don't know what the probabilities are for a lot of the different patterns that I know a lot of people like to trade. But at the end of the day, there's no way you can predict that. You can't predict if somebody's, let's say somebody had a derivative position, $1 billion type person has a derivative position that just blew up and they need to come up with $200 million and they have $500 million of Bitcoin. They're going to have to sell it, or they're going to have to sell something. And you just don't know when that person's going to step into the market. And you just don't know at what magnitude they're going to step into the market. And you don't know what that might trigger emotionally for all the other feeder fish traders in the market when they see a move that makes them think they're seeing some sort of pattern. So to exactly what Andy was saying, if you're in a taxable account, and then you got to account for, okay, so now I've got this frictional tax piece that I've got to outpace the hurdle on that. And it just doesn't make any sense for me personally. I know Michael Saylor has said, and here's a guy, net worth over $1 billion. A guy like Michael Saylor says that it's an intelligence test. And I mean, I agree with that, but there's plenty of people out there that do it. That doesn't mean that it's right. Doesn't mean that they can beat the market or not beat the market. I don't know, but it's just not how mathematically, it just doesn't make any sense to me. And if I can't forecast it or know who those other people are that are potentially impacting it, I just don't know how people think that they have an edge.
That's right. So one more thing too. Think about all the on-ramps, right? So I, as a responsible advisor, investor, have to constantly look at, what are the options? What are the tools available, for investing client funds in Bitcoin, right? And you've got things like the Pantera Fund has been around for years. Obviously, the Bitcoin Trust, GBTC, has been around, but we know the problems with that. But you've got things like 3iQ's got a product. Bitwise has a product, right? Fidelity has even launched a fund product. In fact, I'm sort of surprised it's taken them this long to do it. It has a very high minimum, and I think it's only qualified clients, or actually might be qualified purchasers. So, 5 million in net worth and up. You got Eaglebrook, you got Digital Asset Investment Management, and then obviously you've got Skybridge. They've managed to make significant waves. Obviously, not only do they have Scaramucci, one of the best salesmen around, but they've managed to partner with our friend Michael Saylor, who is the best salesman in Bitcoin, and they're like tag teaming. They're putting out content. So the number of on-ramps now for investors, it just keeps going up, right? There's just more and different ways to get into this stuff. We still don't have the ETF. Maybe Gary Gensler is the guy as new head of the SEC to make this thing happen. But just the number of on-ramps to Bitcoin for investors just seems to go up on an almost weekly basis.
Hey, can we talk Tether?
Actually, yeah, let's do that, because we had a question that was a little bit more broad to set this thing up, and it was from the chat. Let's see, let me scroll up a little bit here. This is from Pratik. He says, when can we expect to see the media launch a coordinated attack against Bitcoin? I think it'll precede real government action. First create FUD and then a formal attack. Well, I think we're seeing it right now in the form of Tether, and it is seems to be a coordinated media attack on Bitcoin. This FUD has been around for a long time. Tether's been around for a long time. We went through months and months and months of Tether FUD in 2017, 2018, that it was going to wreck the market. So let's get a little history on where this thing comes from and why it's popping back out of the blue, Preston.
Well, so I remember distinctly in 2017, I think it was in the fall timeframe, probably September, October, November timeframe, that the tether thing really became a huge talking point on Twitter. It was similar to like what you're seeing right now. And back then, there really was not a really good there wasn't a good argument on either side. It was just a bunch of people on Twitter that just kept saying, hey, this is being totally manipulated. They're running a fractional reserve over there at Tether, and it's totally pumping the price. And so, you know, I had no idea whether this was valid or invalid. I know a lot of the people that had been in the space since the very beginning, the Adam Backs and those types of people, were like, this is total crap. And you know what was amazing for me is when you go into the bear market in the 2018, and I mean the price of Bitcoin dropped 80%. And so Tether was still there. Tether was still being pegged to $1. And anytime I've ever seen a price that's dropped that dramatically in such a short amount of time, if you're running a fractional reserve or you're running something that's shady, it blows up in that type of process. Now, did they just make it by the skin of their teeth? I have no idea. It's not something that is completely audited at this point. I thought Peter McCormick did a great job with his interview that he did with the two folks that he had on his show to talk it in more detail. To me, I listened to that episode, and I mean, it sounded to me, they sounded very authentic, that it's backed. It might not be completely backed with 100% dollars. I don't remember the percentages that they were throwing around, but as far as mark to market value, to me, it seemed like they're at 100% backing for every tether that they issue. The piece where they're basically creating the tethers but not releasing them into the market for security purposes makes total sense. So I don't know. At the end of the day, as a person who has zero tether and as a person who has Bitcoin, if the thing melts down, I mean, I look at it as a buying opportunity for Bitcoin, because the market's going to most likely, and there's people out there that have made arguments that it would actually make the price of Bitcoin go up. I don't necessarily know that I buy that. I think it would spook the market. So I kind of suspect that the price would go down. And if it would, I mean, what a glorious buying opportunity for the underlying thing that you actually want to own, not some tangential input to Bitcoin. So I guess that's just how I see it. At the end of the day, I have an interest of owning Bitcoin because it's a decentralized protocol that has this immutable ledger that can't be debased. The units can't be debased. If there's this thing off to the side that provides inputs to that input output to that, and it breaks or falls apart, or just like an exchange hack or whatever, it's not my concern. If anything, I'll take advantage of it.
Hell yeah.
Yeah, I agree with everything Preston said. I don't know, if it came to light. So first of all, me too. I've never owned Tether. I doubt that I ever will. Mostly because I'm just not 100% confident that it's pegged. But, so what? Others can use it. That's fine. I also suspect that they have very substantial assets and that it's probably mostly backed. Will price go up or down on Bitcoin, if there's real fear about Tether? Yeah, we don't know. I actually am sort of in the suspect it goes up, at least in the short term camp. But even if it goes down, the way Preston framed it is right, is if it's an overhang, right? If it's sort of a FUD overhang, then the longer it persists, the longer, the fear in the market exists. And so if it finally implodes, that'll be fine. That'll be good for Bitcoin in the long term, arguably. What it does in the short term, I don't know. Maybe it's the buying opportunity that Preston suggests. But yeah, I think the way to frame it is either the FUD continues in perpetuity, or if it blows up, then that piece of FUD should be forever stricken from the list. Take it off I don't remember if it's on the FUD dice or not, but take it off the FUD list, take it off the FUD dice, and we can move on with life.
Well, and look at this too. all these exchanges are trying to create their own stable coin to whatever fiat at this point. So you're going to have all these other coins that are already there. All the technology is already in place for them to step in and take that market share. I think it's a very competitive space. And if Tether would be running something like that, seeing all these competitors in the space, you would think that they would wise up real quick and make sure that they're going to keep themselves competitive in the future. And I think that was one of the reasons why in Peter's interview, they were so open to start being more transparent with their token, is because if they're not, all these other exchanges are going to take that market share away from them very quickly. And I think you're going to also see all these boomer banks, all the big large cap boomer banks are going to try to step into this market as well and have their own Tether-like stable coin pegged to fiat type thing. So this is such a nothing burger for me. Like when I look at this, I'm just, every time I see another thing on Twitter, I'm just smirking like, what a bunch of idiots to put so much, like they're slapping such a discount on this as far as the risk. And I'm just looking at it like total eye roll.
Oh, you're on mute.
Thank you. The Tether thing, that it stems from the New York Attorney General's office investigating an improper loan, an apparently improper loan of $850 million, which came result of a fraud from one of its payment processors called Crypto Capital. And the accusations are serious. The investigation is serious, but it has nothing to do with whether or not the holdings are collateralized completely or not. Like,
yeah.
And with $20 billion, of Tether issued out there, obviously the United States authorities are going to be keeping a close eye on this. They have been looked at. They have been audited by, a couple of years ago by the CFTC, and it's just, there's nothing there. And like Preston said, let's say the worst case scenario, and the 99% chance that there's nothing there, the 1% chance that there is something there, then and it goes completely belly up. It's only $20 billion of an $800 billion asset, and yeah, it's going to leave a black eye probably for a little while. But what a buying opportunity for us. I mean, we're going to be buying at a time in the middle of a bull market with a 20, 30, 40% dip. We're all going to be there. All of Swan's members are going to be there, stacking their way through that one.
Bring it on. Bring on, the existential threat. Bring on, like the Bcash fork. Let's get it behind us. Bring the pain so that we can move on. So that the Pac-Man, so the Bitcoin Pac-Man can continue its way chomping through the fiat world.
I know if I was in traditional finance and I had massive bags to move into Bitcoin, or I was trying to, God, I'd be sharing the heck out of that article.
Right. Right.
Yeah. Anonymous, by the way, anonymous article.
Yeah. Anonymous.
And
jeez.
This is a tried and true playbook. You use your microphone to suppress Bitcoin price. That's why we call it FUD, fear, uncertainty, and doubt. And we laugh at it and we give it this acronym and we chuckle because these things happen over and over and over again in Bitcoin, and they come from people who have access to megaphones, or have their very own megaphone, and they'll just shout this fear and uncertainty about Bitcoin and create doubt and suppress the price. And the whole time they're just filling their bags. And
Brady, I have one more point. So for people that just let's say you took a position in the summer back when it was 10,000 or whatever, and you've experienced this bull run and you've 350%ed your position.
Yeah.
But you've never really put in a lot of hard work, which I would imagine if you just took a position for the first time this summer, you've heard the narrative, oh, well, central banks are debasing the money. This is the thing that so-and-so bought. So they take a position and they haven't done a lot of research and understanding on how everything works, how the protocol functions, the engineering, none of that stuff. And they had this big giant gain. Their immediate human reaction is, I'm about to get clobbered, because nothing comes this easy. And so then they'll read an article like this and they're going to say, all right, I'm way up. Like, this was awesome. I can go out there. Let's say they drop 10,000 into the position. Now I've got $35,000. Like, I can go buy a car with that. Fiat, spend money, cognitive buying, the way people think these days. I can go buy a car with that, and that's a win. And if it goes higher, it goes higher. And like, that's how people justify their actions and their decision making, but they're not doing any of the deep, hard, critical thinking that's required in order to really kind of hold on to your coins. And for anybody that's been in the space for a long time, they realize real quickly that once you sell whatever you had, your chances of getting back that same position is probably a whole lot lower than what it was when you had it previously. So
that's 100% absolute truth. I think most of us have lived that. And I mean, especially if you're selling into dollars, you're selling into another crypto for that matter, or even if you purchase anything, the taxes, if you're in the United States, the taxes that come along with that, if you haven't held it for a year, it's taxed at your income tax rate, essentially 20, 25, 30, 35%. If you're long-term capital gains tax, it's 15% for almost everybody. That's hard to overcome. Like, you're going to have to get back down, get into a position, catch a dip perfectly, like a 40, 50% dip perfectly, and to make all that back up. And it's just not going to happen. This is a game that can only be won by not playing the trading game. I just want
to augment this, right? I've been in the investment business for almost 2 decades, and the worst and most painful investment errors are not where you buy and it goes to zero. Okay. Buying and going to zero sucks, but it's not the worst. The worst is selling and then it goes 5x and 10x and 20x and 50x. And I have personally done that. Most painfully for me was Netflix, right? Most painful for me was buying 1,000 shares of Netflix at $50 a share in 2012 and selling it at, I can't remember, $80 or $90 a share 5 months later, right? Nice little trade, right? And that $50,000 position, which went to 80 or 90,000, would have gone, if I'd held it today, to 2.5 to 3 million. Okay. Now, would I have held the position the whole time? Even if I'd had conviction? No, I'm sure I would have trimmed it along the way. But yeah, I would have made the 50 bagger on that thing. And Netflix was one of these phenomena that was an internet native, network effect driven investment. And we've seen it with Netflix, and we've seen it with Facebook, and we've seen it with Amazon, and we've seen it with Google. And now we're seeing it with Bitcoin. And so, having seen this movie before, and of course, Bitcoin's not a company, but it is one of those things that can go much, much higher and get much, much bigger and surprise most of us. I'm not going to get shaken out. Will I start to peel off small quantities in the 6 figures? Maybe, possibly, probably, but I am not going to make the same mistake that I made with Netflix, because that was a very, very expensive mistake personally. And there's going to be a lot of people out there still who make that mistake with Bitcoin. I hope they don't, but some of them will.
Preston, put it in your words, man. Somebody comes up to you and says, hey, I want to invest in this Bitcoin thing. I'm looking at maybe trading it. It looks pretty volatile. Maybe I can, kind of increase my position by going back and forth. What do you tell them?
Good luck.
What do you tell them? What do you tell them they should do instead then?
Well, I just tell them that I try to explain how it moves in 4-year cycles, that you're in a bull market that typically lasts a little over a year. And you're about halfway through that period of time. It's very volatile while it's taking place. And so if you think you can step in and trade it, you're probably kidding yourself. The best way to kind of handle it. The thing that I get a lot of questions on is a person will be like, hey, I got $50,000 and I want to buy right now. And what I find can happen, especially when you're in a bull market like this, is people can take their $50,000. They want to get in like immediately. They feel like they're missing out, and so they'll buy And you might have one of these 30% corrections, which typically take 30 to 40 days to kind of play out. And if that's the case, and the person has no conviction because they don't even understand what it is that they're buying, they're going to sell, and they're going to sell at a loss. So what I try to encourage people to do, if they're buying during a bull market like we're at right now, and you're halfway, my opinion is that you're halfway through this. I think what the best strategy is if you have, let's say, $50,000 to invest, you spread it out probably over a 30 to 45 day period where you're doing a dollar cost average on a daily or weekly or bi-weekly basis in order to step into the position, so that if you are in one of these short-term correction periods, that they capture the whole thing. And I think it's a whole lot easier for them to swallow that pill than to buy and hopefully get their timing right and go on 100% burst. That would be optimal, but I find that it's easier for them to get some type of conviction and be able to handle the volatility a whole lot better by stepping into a position a little bit slower, drawn out.
Yeah. And then just continue buying at that point, right? With whatever extra income you have. Yeah.
Like my business, we've got free cash flows. I sweep them every month. And then that month I'm looking for an entry point, and then I do it again the following month. So, whatever tempo the person has for free cash flows, if they get paid twice a month or whatever that might be, then whatever they have left to try to sweep into it, I recommend that they try to do that, especially in a time like right now where you're in a bull market. And the trend, the long-term trend is very aggressive and way up from a momentum investing standpoint.
Yeah, this is the perennial question for people who are on zero, right? And I was getting a lot of questions. I was getting some questions back in November, December, people who are on zero, and it was like, well, do I DCA, or do I pile in now? And the advice I was giving back then was, well, get a sizable chunk now because it's moving, and then DCA the rest. And, what's the right sizable chunk? A third of the position, 2/3 of the position. Only you can decide that, dear friend, dear family member. But then, we've had a significant move up here. And as Preston pointed out, we're sort of ahead of schedule or ahead of the model in terms of, stock to flow or other models that you might look at. So, yeah, I am more in Preston's camp at this point. I'm more in the DCA camp over a period of time rather than, piling in a big chunk now. I mean, I definitely can see the logic for getting some if you're on zero, and then once you're off zero, DCA is a no-brainer.
Yep. That's exactly what we built Swan for, right? The same. That's the ethos, is you can make one-time buys, you can wire in now, and we're seeing a lot of members who are wiring in money and making a big buy, establishing a position, and they'll, wire in some money and then buy once a week over like a 6-week period or something like that. We had a couple people, of course, who bought in at like 40, 42 with a big chunk and watched it right back down to 32, and they were a little disconcerted, but we're like, all right, just hang on. It's all right. You just kind of got to keep buying, just buy up this dip. So that's what you got to do. And there's a question here that came in from the audience. Let's see if I can pull it up, from Brent. So we talk a lot about this, right? You just buy and hold for long term. This is a 5, 10, 15, 20-year play. Think about it like a 401k. Think about it like a payment on a mortgage. This is a long-term investment. So Brent asks, well, I keep hearing to hold forever, but what's the end game? Do we ever want to realize profit, or are we just assuming that there's going to be some kind of currency shift, a unit of account shift in the future? And are we waiting for that? Andy, you want to take that one first?
Sure. So first answer that I will never, ever sell the last of my Bitcoin, right? Because I don't want to say the fear, but the expectation of a significant probability that, it becomes the new reserve money. So, you better have some, right? You better have a good chunk of it. Can one peel some off if one is already irresponsibly long, right? To use the favorite phrase of someone we know in the space. If you're irresponsibly long Bitcoin,
it's responsibly long, Andy. It's responsibly
Exactly.
Everyone else is irresponsibly short.
That's right. And then it goes, 10x from where you bought, then you're DCAing in the whole way, right? So you're piling on. And then it becomes time to secure your financial position in other ways. If it's time to build or to buy a house because you don't own your home, or it's time to buy a second home in a different jurisdiction, these things can come up, and it can make sense to peel some off. And then the question you have to ask yourself is, if we don't go straight up, and if we don't achieve escape velocity in this cycle, and we have an up move and then a crash like we have in prior cycles, then you have to ask yourself, how strong is your stomach, right? How strong is your HODL grip? If you have lived through a cycle, at least a cycle, if you've already seen a 75% or 80% drop, and you've held strong, and you feel that you could do that again, then who am I to say that you should peel any off? Hold through for as long as you intend to. Think about your long-term goal and how high you think this can go. However, for most of us mere mortals who will experience some psychological pain if we get another 75, 80% correction at some point in the future, it can make sense to peel some off and do the right things for you and your family financially, to position yourself how you want to be positioned in life, and buy yourself some runway, by the way. I mean, there are people who are, for example, who still work fiat jobs and would like to work in Bitcoin, but reasonably they ought to buy themselves enough runway in terms of living expenses, such that if there is another multi-year bear market, they've got enough runway basically that they can position themselves into the Bitcoin industry job or into whatever they want to do, and have enough runway basically to get them through to the next cycle, if that's the way it goes.
Mute.
Mute. Would you like to take a stab at that one, Preston?
I don't have too much more to add to what Andy said. The only thing that I would highlight is, obviously, it's a personal preference. It comes down to your lifestyle choices. If you live a really humble life and you're loaded in Bitcoin, I mean, sure, you can sell some of it and do what the things that you want to do. I mean, it's just so personalized to the person, how much they're sitting on, the things they want to do in their life, their goals, how young they are, so it's really kind of hard for me to comment too detailed. Yeah.
Can I address a question from the chat real quick? Somebody suggested that that you have a bust of Charlie Munger somewhere in your office, Preston.
Me? No,
is that a real thing?
No, there's people. So no, I don't.
Rat poison.
So I have friends that have these things. I don't know. I've always found them a little strange, but that's me. But yeah, I know people that have those.
Wow, how weird. I've learned a lot from Charlie, notwithstanding his rat poison squared commentary. I'm a big fan of Poor Charlie's Almanac, but yeah, I also do not have busts or figurines or photos on my wall.
The idea is that you're using it as or it's there and you're inspired to be like that or whatever. I don't know. It helps your thinking but I don't know. Just not for me.
All right. Well, sorry to sidetrack the conversation. There you go, Brady.
I like that sidetrack.
Let me push my bust a little bit further behind the computer here so you can see it.
I have some bull horns back here, and well, that's what I use.
No, and I see a comment there. Must be Stig. No, Stig does not have one of these either.
yeah, so everyone who's watching, thank you for being here. We've got well over 600 people watching. It's awesome to have you here on a primetime Swan Signal Live. These are some of my favorite episodes with these two guys and doing these at nighttime. I love the vibes. Swanbitcoin.com to buy some Bitcoin. We also have this YouTube channel here. Most of you are watching on this YouTube channel. Please like the video, let it spread out. Let it spread its swan wings and fly around those YouTube algorithms. Get this Bitcoin knowledge, Bitcoin education out there as much as possible. There's some massive crypto channels out there, and every bull market, these crypto channels bring in hundreds of thousands, millions of views, and they're just getting people wrecked, dumping their bags on these poor people. We have a small emerging Bitcoin only YouTube that's growing in power and strength, and we need to continue that. So please like, subscribe, share this channel. We also have Bitcoin TV on this channel. It's kind of a new thing. We're working on building it out. It's sort of the MVP, the minimum viable product that we have for Bitcoin TV. It's on this channel. It's 24/7. Best Bitcoin content that we could find on the web, the best video content we could find on the web. Preston Pysh is on there, some Andy Edstrom's on there. We've got Alex Gladstein, Saifedean Moose, Marty Bent, Stefan Livera. We've got everyone that's out there spitting fire and educating about Bitcoin. Now you can just pop it onto your TV. We've got a price ticker down there so you can keep your fix going while you're getting educated. And that's just going to get better and better. We're working on ways to improve that. So check out Bitcoin TV on this channel. Like, subscribe to the video. Really appreciate y'all being here and appreciate you taking some time to, improve yourself by learning about Bitcoin. I am a big believer, and I think along with the two guys here, that this is a life-changing opportunity, and that the only way to really take advantage of that opportunity to its fullest is to educate yourself and take the time to do that. We also have a free book that was written by our co-founder and CTO at Swan, Jan Pritzker. So you can grab that at swanbitcoin.com/free book, Inventing Bitcoin. It's a great introduction to the Bitcoin system. Tells the story of why Jan really believes in Bitcoin. His family emigrated from Russia, very strict capital controls when his family left, and they left with very, very little of their wealth. And had Bitcoin been around, they may have been able to transfer that wealth into Bitcoin and escape from Russia at that time with a lot more of their wealth intact. So this is a technology that is near and dear to Jan's heart, and he's also a great engineer. So he describes the Bitcoin system in a really easy way to understand. So check out swanbitcoin.com/free book, PDF, Kindle. There's an MP3 version. You can share it with anybody you want, far and wide. So spread that education around. That's what we're trying to do here, is educate as many people as possible. All right, let's get back into it, guys. We have about 10 or 15 minutes to kind of wrap things up. I wanted to I'm kind of getting a little sentimental here about Bitcoin, what it means to me. I got those feels going. I got the vibes here that, this is something really important. I feel like, looking back 20, 30 years from now at these moments where I was hanging out with Preston and Andy in the corner of my bedroom, doing these things remote, and it's going to be an amazing feeling. So I wonder if I can just get you guys to wax poetic for a minute about what Bitcoin means to you in this moment, what you think it will mean to you when you look back 20, 30 years from now, and the gravity of this moment is a lot more apparent than it seems like it might be right now. Preston, you want to kick that one off? Andy, you want to kick that one off?
Okay. Bitcoin is, I'm trying to think of the term, vocation, avocation, calling. It is the most interesting thing I've ever studied in my life by far. And it has the most potential for positive impact on the world. And it is still severely misunderstood. And it can make us all wealthy. So when I'm asking myself, how do I want to spend my time? It's hard to imagine not spending my time and effort on this thing. And the community has been so amazing and so welcoming. And, I just feel so lucky to be here. I mean, everyone who's watching, everyone in the chat, By the way, I haven't figured out how to walk and chew gum at the same time. I haven't figured out how to answer chat questions and also talk coherently. So sorry for that. But all the people watching, listening, interacting, it's just such an amazing, warm, and also brilliant, community. I've never seen so many smart people who are so much smarter, so much more articulate than I am. And I feel, blessed and lucky to be involved. So I hope that Bitcoin is much, much bigger. I hope it reaches its potential. I hope that Bitcoin is the life raft and the mechanism for solving the 80-year debt cycle problem, the debt bubble. And I hope that it reduces the potential for actual conflict, loss of life, war, basically, that usually comes out of these 80-year cycles that we know about from the fourth turning, like Brandon Quittem has written so eloquently about, in addition, obviously, to William Strauss and Neil Howe, who wrote the book. So, yeah, I can't think of something more interesting and more fulfilling and enriching in multiple ways to be working on than Bitcoin.
Yeah, man. I hear that.
I'm not laughing at you. I'm laughing at the chat, Andy. I'm sorry.
The chat can really rip it up, and I don't always get a chance to watch it while we're rolling either. And a lot of times I'll go back and watch live, and you all just rip it up. I appreciate you all in the chat. Oh yeah. I mean, I'm looking and seeing the names here. I'm sure you guys are having a great time.
so many great familiar names and faces there.
Yeah, good to see all the regulars, our YouTube Bitcoiner friends. Preston, you're not getting off the hook of this one, man.
I tried. Did you see me trying?
I saw you trying hard. I mean, if you really don't want to, that's cool. But I would love to hear what Bitcoin means to you, and do you feel a sense of that this is sort of a moment in history that is special, and that you sort of you have your eyes wide open here more earlier than most people on the planet to what's going on.
So here's me on a political sidestep to answer the question I really want to answer.
When are you going to run for office, Chris?
So this is something I want to talk about, which is, 5, 10, 15, 20 years from now, how are we going to look back at this and say, what is this? One of the things that I think about a lot, Jeff Booth's book had a really profound impact on me, mostly with one of the themes that he talked about, which is, when you have this inflationary monetary policy that's exercised over a very long period of time, call it 80 years, which is my opinion on how long this thing that we're experiencing right now has been exercised. It creates an incentive structure for capital investment, and it creates this incentive structure for technology to just become accelerative. And Jeff and I have talked offline multiple times, and I don't necessarily know that we agree on this, but my point of view and my opinion is that when you debase the money consistently over and over and over again for such a long period of time, that this incentive structure, once it gets set in place, I often think about, well, what happens if we weren't debasing the money and we were actually making it more valuable, and we would do that over an extended period of time? What would be the impact, and what incentive structures would pop out of that? And my immediate inclination is that it'll have the polar opposite incentive structure to what we're seeing here at the tail end, which is that technology is totally eating the world. It's outstripping humanity's ability to be able to deal with it, is how I kind of view the events that we're seeing right now. So my concern for Bitcoin in the very long term, not in the short term, but in the really long term, is would we see something that would be something that would incentivize technology to really slow down, and for capital investment to really slow down, and for people to not have nearly as much of an incentive to work extremely hard. Like when I look around the world, like today, at the very tail end of this 80-year cycle that we're talking about, are we seeing something that everyone is working so incredibly hard and not being able to get ahead, and that they're drowning under the water collectively as human beings around the world because of this incentive structure that was put in place? I'm just kind of curious, like what happens if Bitcoin's successful for 50, 60, 70 years? Would we see something that would be the exact opposite of this? Would we see people just slowing down and not working nearly as hard and all those kind of things? So I think in the short term, which is where I think your question is going, like, what's this look like in 10, 15 years from now? I think it's going to resolve a lot of the issues that we see around the world today. It's going to be probably pretty painful for a lot of people up front. And I think in the long term, it's going to be a very breath of fresh air, probably in that 10 or 15 to 25 to 30 year time frame. And then some of the other stuff that I was saying earlier is much further out, probably assuming Bitcoin could be, successful 50, 60, 70 years later. Those would be my concerns about Bitcoin being successful, which, we never talk about. It's so far out there. It's like ridiculous, right? But it's stuff that I enjoy talking about and thinking about, because I find it just to be a really interesting conversation, because it really revolves around incentive structures and what kind of pops out of these policies, these monetary policies. And we're stepping into one that was completely driven by humans, and we're stepping into one that's completely driven by computers. And so what does that, like, what's the long-term impact of something like that? And I think it's just a really kind of interesting idea.
Yeah, that is interesting. Do you think people need the incentive? Like, so your concern is that if we live in a world with, obviously at that point we'll have so much technology that basic human needs will be taken care of for very cheap. You combine deflationary technology with deflationary money. You're living in something like a Star Trek world, perhaps, or closer to that than it is now. What human motivations are we dealing with, right? What incentives are we dealing with?
So what I'm suggesting is, think about how much technology has grown over the last 80 years relative to every other period throughout history. Yeah. I mean, it's almost like you just didn't hit the afterburners. It's almost like you just are in a completely different, like, yep. You're approaching the speed of light. You're going so fast, and technology is outstripping humanity's yep. ability to deal with it. And mm-hmm. so my opinion, and I think you get this from Jeff's book, is you have this inflationary monetary policy that has incentivized capital investment. I mean, look at what's on TV. It's venture capital, like Shark Tank type stuff, and everyone thinks that they're Mark Cuban on Shark Tank nowadays. That's in finance. It's like, oh, I'm venture capital, this and that, and they're just trying to get the money. They're taking all this debased money that's getting printed like crazy, that's inserted straight into the top, and they're investing it in anything that looks like it's going to have a big fat return and it's going to be the next big tech thing. So you're at the tail end of that incentive structure.
Right.
What I think would be natural to think about is, if you start getting into a money that's the opposite of this, that it's not inflationary monetary policy, that it's deflationary monetary policy. And let's just say that it was exercised for 70 or 80 years, which would be the exact opposite spectrum that we're at right now. Instead of having everybody thinking that they're Mark Cuban on Shark Tank, do we have the exact opposite of that? And is that good? I don't know. But it's an interesting thought experiment that obviously does not apply to anything that people can use today to make actionable decisions. It's just a fun thing to talk about.
Except for Janet Yellen's 50-year bonds. You might have Janet Yellen's 50-year bonds at that point in time. And that's an action you could take right now.
Do we want to talk that real fast before we hang up? I don't know if you have a certain time hack that you got to finish, but I would love to talk.
I'm good to go for a while longer, man.
Andy, did you have any thoughts on this? Did you see this?
Oh, well, I was going to react actually to your earlier point, which is, when you have a slightly slower rate of technological advancement, with a hard money standard.
Yeah.
I would posit that yes, you would, but not on potentially on a full cycle basis. In other words, if we've had this accelerated period where yes, whatever, I have to pay 50 times earnings, for Amazon and Google, because I have nowhere else to go. I don't have a store of value otherwise, and stocks have been monetized. Yes, we've had this strange period in time. Maybe it's a few decades, but when the unwind comes, it may be more than reversed. And I just wonder if I actually think you might be right, but I also suspect that if you take the entire cycle in total and say, okay, there's this period of accelerated tech, but then the crack up boom and sort of the aftermath reverses it. I suspect that it's not a sort of net negative to overall technological progress over a full cycle. But anyway, go back.
Jeff. So Jeff, for the record, Jeff did not like the idea. When I was telling him, he was kind of like, yeah, I don't know that I buy that. I mean, tech's moving so fast at this point. Like you're not, and I agree with him. I think when you think about the trajectory of it now, especially after 80 years, it is on such a trajectory that like, even if you immediately stepped into a deflationary currency right now, like it's not going to slow down tech anytime soon.
No.
And I agree with him there, but I'm thinking like really far out there, what would be the impact of that and what would kind of start materializing. And anyway, it's a topic.
Yeah, I mean, I just think it comes down then to raw human ambition. And does human action require monetary incentives or not? And I think that's the question that has to be answered. And now we're talking philosophy. That's a long discussion. I certainly have ideas there. Maybe we should have that talk at some point, but it is getting a little late tonight. But we should talk about Janet Yellen's 50-year bonds, because I think it'd be a funny one to close up on. Preston, sounds like you got something to say.
Yeah, no. So this should not be surprising to anybody that you're seeing this. In fact, I'm a little surprised that she didn't say a 50 and 100-year bond, because they are buying up everything. And so when people say they're buying the short end or the long end, let me just explain to the audience. All you're talking about is the duration of the bond. So if it's a 1-year bond or it's a 5-year bond, and you laid them out on a chart where the like on a XY axis, if you're looking at the X axis, all the short duration bonds are on the left-hand side, and then they just systematically go out till you hit your 30-year bond on the far right. So as they continue to buy all this debt out of the market, it's driving the yields lower and lower. And so your yield curve is completely flat across that X axis. And so now they've got to issue more debt way out there at higher yields in order to have more debt to buy and to manipulate and to make people think that the inflation rate is, what would Andy, what do you think the yield would be on a 50-year bond if they were issuing something like 4%, 5%? Would it even be that high?
Maybe even lower, right? Because I mean, if the 30 years is under 2, we have to remember Argentina did a 100-year bond a few years ago. Remember this? I think it yielded like 8. I think it was like 8% roughly. Like
for 100 years.
For a 100-year bond for a country that has defaulted on average once per decade in the last century, right?
Yeah.
So yeah, what could the U.S. borrow at? What rate? I mean, got to be under 5. Got to be.
I mean, you're butting up against the average length of, global reserve currencies when you start going 50, 100 years. I mean, we're getting up there anyway.
Well, just as a reminder too, another historical precedent is the UK, or I should say Britain. Okay, when Britain was top of the heap in the prior, 2 centuries ago, really, they issued perpetuities. Okay, they issued quote unquote bonds, right, that pay a coupon at a fixed pound sterling rate and never mature. So there is precedent for governments, especially governments that issue the world reserve currency. In that case, it was the pound sterling, issuing a fixed income instrument that never ever matures.
And they have to do this stuff. So I can see in the chat people were bashing Janet Yellen, and I think that's, it's so easy to do. At the end of the day, they have to do these things. They have to supply liquidity into the system and they've got to get it in there in a desperate kind of way, because the velocity of money is just falling apart. So the velocity of money is just like, people aren't spending. Well, why aren't they spending? Well, because the money that they keep printing and inserting via the bond market through QE is just going straight into the top through market capitalization of assets. And so if it keeps getting capitalized into asset prices, how is it possibly making its way down to a person that's living in some small town out in the middle of America, that the whole business sector has just been obliterated? It's not. And so they have to do these kinds of things in order to try to push more fiat into the system, because the money is just pulling itself straight into asset prices.
Yeah.
And as long as they can find bag holders, why wouldn't they do it? Right? Why wouldn't they do it? If you can find an investor who's willing to buy a 50-year maturity instrument at a low single-digit yield, I'm assuming, maybe because they think that that 4% yield is going to go to 2%, because rates are just going to keep going down, because the Fed is going to buy up that paper eventually anyway in QE 78 or whatever QE program we end up on. Maybe it'll end up with QE 21. We'll hope for that kind of poetic justice. But
that'll be the end of it.
Exactly, that'll be the end, and that'll be hyper Bitcoinization. But why wouldn't they do it? Of course, they're going to do it.
Speaking of things that Andy said, of course they're going to do, and I think it was here with Preston, some show last summer after the micro strategy news. Can we get back to Andy at the call of the year and Michael Saylor taking on debt to buy more Bitcoin? This was a conversation that Andy and Preston were having on this very podcast a while back, right after the first MicroStrategy buy, and you guys were going back and forth about how it just seemed obvious, and it did come to pass. So what's the next call?
I want to give credit to Preston for expanding my thought process, because Preston had been talking for a while about how companies, were going to put this stuff on their balance sheets. Now, maybe that was a little bit because he was smart enough to do it for years, basically. Hats off. Quite a profitable investment. But yeah, I don't know. I mean, I was thinking about this the other day. I think on Pubby and Andrews's pod, which Preston did recently as well.
I did do that.
Fun time.
Fun.
I
Good
did
times.
Subsequent episode, and somebody asked the same thing, and I was thinking, what's the next MicroStrategy bond deal? I mean, I have no idea. You could say that MicroStrategy today has a $5.5 billion market cap. Now that's probably not fully diluted, assuming full conversion of the bonds. But if you just take it on a face value basis, which
will be converted.
Yeah, exactly. Exactly. They're in the money. So yeah, you could argue that in one respect, it's only $650 million worth of debt versus a 5 billion plus market cap, which is a debt to market cap ratio of only 10 or 15%, which is quite low. That suggests there's a huge amount of room to put more on the balance sheet, especially if it's converted. So yeah, I don't know what the market will bear. I suspect that if Michael do another deal, he will. And could it happen in the first quarter? Why not? How to size that deal? I really have no idea. It's about how desperate are hedge fund managers to get their Bitcoin exposure, when they don't have buying Bitcoin outright in their mandates, in their fund mandates. But could it be several $100 million more? Yeah, sure. Why not?
I'll give you a prediction.
Let's do it, Preston.
And who knows if it's true? But I kind of suspect once all the companies start filing their fourth quarter, you're going to be surprised by how many people were putting Bitcoin on their balance sheet. I'm a hopeful that you're going to see one of the big names in tech that have been putting it on their balance sheet. But as far as being able to name one, I have no idea. But yeah, I kind of suspect the fourth quarter is going to surprise a lot of folks how many companies were putting it on their balance sheets.
So the fourth quarter reports would show that Bitcoin already exists on balance sheets. Would we also possibly hear like treasury policy updates that would include Bitcoin that hadn't been purchased yet. Would that be a possibility?
No, I don't think that anyone would want to signal that.
Yep.
So, but for all the ones that will put it on their balance sheets, yeah, I mean, they're going to have some type of write up in their 10Q and their 10K that addresses it. They're going to have to. And what's going to be fascinating is I would imagine every one of them is just going to copy paste what Michael Saylor had in his, which is, hey, the money's being debased, and this is a hedge against that. So.
And by the way, he open sourced. I mean, obviously, he's talked about it, on various podcasts, including your own, Preston. But I believe that he recently open sourced, their whole playbook, basically, on it, published it. And I would only add that for every company that does either announce exposure or just have it in the notes on the Q or the K statement, there may be several other companies that have bought up to a non-material threshold, right? They put 0.5% in, or they put 1% in. And I actually have a client who used to be the corporate treasurer at a Fortune 100 company. He has been retired for a while. And I asked him this specific question. I asked him, what's the materiality threshold, basically, for having a currency, let's call it, as part of your treasury. And he was nice enough to respond that it had been a while, and he didn't remember that there was a specific threshold, and that his CFO had told him that it's not the percentage that matters. It's more like the risk parameter. So I don't know that there's a hard and fast rule for when you would have to disclose, like how much of your treasury, what percentage would require disclosure. But I have to imagine that there is some materiality threshold, some small amount that some companies could accumulate and buy, put on the balance sheet, that they would not necessarily have to break out in the disclosure if it's small enough.
So does Elon Musk hold? Is Elon Musk holding a big old fat bag of Bitcoin?
No, I don't think so.
You don't think so? Did you guys see his Twitter interactions with Robert Breedlove?
Yeah, I saw that, and it seems like he has an interest in it. I think the issues that Elon has is, although he has been cash flow positive over the last year, he's just becoming cash flow positive. And I mean, if you're not cash flow positive, you're not buying Bitcoin.
Yeah.
So that's my biggest concern for Tesla moving forward is whether he can remain cash flow positive moving forward. Because if he can't, he's got issues if he wants to try to put Bitcoin on his balance sheet. But it appears Tesla's starting to turn into a profitable company. Now you want to get into a conversation about market cap. I mean, holy moly, we can go there. But with respect to him buying Bitcoin, I don't know that I necessarily see him being one of the first tech companies that do it. I think he needs as much cash as he can get for all the things he's trying to do from an operational sense.
That's right. Yeah. Preston's spot on about you got to have cash flow, to be buying big chunks of Bitcoin. The other thing too is risk assessment on valuation, right? He has a shareholder base, just like every company has a shareholder base, and the shareholder base assigns some valuation to the company. So if your company is trading at 5 times earnings, maybe you take a flyer on Bitcoin, right? You don't have a lot to lose in terms of the valuation. Tesla is the opposite of this. Tesla trades at an arguably insane valuation. I mean, I don't want to get into the debate on that, but he would be risking potentially, loss of the valuation premium that he has already very carefully and very adeptly accumulated to his benefit. Yeah. And I just don't know if the risk return in that regard, is worth it to him.
Yeah, I think he's very interested in it.
Yeah, it seems that way. I mean, he started PayPal was kind of an idea, right, to create an internet native money. I mean, it didn't turn really into that, but he's been interested in this problem for a long time. So it seems like something he'd love to explore if he weren't launching rockets into space and, revolutionizing the car industry. But yeah. I think at some point he'll talk to somebody about it, and I would love to see him talk to Breedlove. I think that'd be a great combination. Apparently, he's talked to Saylor as well, who got kind of cheeky when asked about it on CNBC or Fox Business or something. So it sounds like they've talked. And speaking of Saylor, just wanted to show this real quick before we wrap up. Saylor's got speaking of like open sourcing his whole process to acquire Bitcoin for his corporate treasury. He's running a conference February 3rd, 1 to 6 p.m. called Bitcoin for Corporations. If you just go to microstrategy.com and click on I think it's microstrategy.com/Bitcoin, you'll see it there, and you can register for it. Are you guys gonna? I assume you guys are gonna be there checking it out.
I have one more comment on the Elon thing.
Please.
Elon is probably one of the best marketing people in the business, like the best. I mean, him shooting a car into outer space. I mean, you just look at some of his antics and the things that he does. He knows how to drive eyeballs to Tesla.
Yeah.
If he bought even a pittance of Bitcoin and put it on his balance sheet from a marketing standpoint, the amount he'd have to pay for the airtime that would get would be, oh my Lord, I couldn't imagine if you had to put a dollar figure on it.
So true.
So if I was going to argue with myself in my earlier comment, because I obviously look at things from a very financial, mathematical kind of standpoint, but if I was going to look at it from a qualitative standpoint, I might have a different point of view. And Elon might be looking at it and be like, man, the amount of marketing and airtime that Bitcoin's getting right now, if I put $1 million of this on my balance sheet, it could bring $100 million of marketing and branding and who knows what else to the Tesla website. So maybe
it's true.
Maybe we see something like that.
Can you imagine the tesla.com/Bitcoin webpage should be like all anime memes and stuff, like like I don't know,
all the
Bitcoin,
all the meme masters, would be on it 24/7. A lot of them I think are probably in the chat right now.
I could see him literally recreating that meme with the dude riding the rocket ship into space and doing the cowboy thing with the Bitcoin face on. He could actually do that. He could make that meme come to life. That would be amazing. I'd be here for that.
Somebody wrote Tesla Model B. I like that. That's what they need to they need to rebrand the Cybertruck.
It needs to be orange though. It needs to be orange.
Imagine the buzz. I mean, it'd be insane.
It would be. Elon, make it happen. We're gonna be up in your DMs. We're gonna mention you until we make this happen. Bitcoin Twitter memes things into reality. All right. So I know we got a lot of meme masters in the chat and watching here today, and one producing this show right now behind the scenes. So meme masters, get to work. We want to see a Model B. We want to see the Bitcoin rocket taking off, flying through space with the cowboy riding the rocket, and whipping his Bitcoin hat around come to fruition. I want to see that happen. That needs to be on our timeline. All right, guys. Anything else you want to mention before we wrap this thing up? This is, as always, a great time. Really appreciate you all coming on.
It's always an honor to be talking to both of you. Thank you, Preston. Thank you, Brady. Thank you, Swan. Always a blast.
Thanks, Andy. Appreciate it, man. Thanks, Preston. Appreciate you.
Yeah. Hey, thanks.
Until next time, great work, man, on the pods. Everybody make sure you check out Preston's Wednesday Bitcoin drops. They've been absolutely world-class, so I am consuming them voraciously. Suggest you do the same.
Andy's book, Why Buy Bitcoin?
Bitcoin?
Go to Amazon right now. Buy it for your wife's, for your father-in-law, because he just doesn't want to listen to anything you say.
Written by a financial advisor. It's a financial advisor. I mean, come on.
Also, none of this is financial advice. Oh man, you guys are too kind. I'm looking forward to Preston's next pod.
Jimmy Song coming out soon.
All right, I'm there for it. Tomorrow night, right?
Yeah, it's coming out tomorrow.
All right, cool. All right, thanks, gents. I'll let you both go. I'll wrap things up. Thank you, everyone, for being here. It was a ton of fun, as always. Appreciate your time educating yourself about Bitcoin. That is what we are here for at Swan. It is a core part of our ethos. Our marketing is education. It's what we do. We create educational content and put it out there as a way to market. We want to sell Bitcoin, but we want to teach how to engage with Bitcoin in this new revolutionary technology, monetary technology, in the best, safest way possible. So we hope that by doing that, we earn your trust and your recommendation to send your friends and family our way to Swan as a little token of that ethos. We have a free book, swanbitcoin.com/free book. It's by our co-founder, Jan Pritzker. Fantastic read about why we need Bitcoin and about how the system works. Just give you a basic understanding of how Bitcoin works. That's at swanbitcoin.com/free book. We also have been working on a new app called Clubhouse. So if you have an iPhone, you can get on this app called Clubhouse. It should be available on Android sometime soon, but they're rolling out, by the invite process. You can go to t.me/Bitcoin Clubhouse, t.me/Bitcoin Clubhouse, and that's our Clubhouse Clubhouse Bitcoin Telegram group. You can see if you can snag an invite there. There's Bitcoin conversations and Clubhouse rooms going on every day. We have a club called Cafe Bitcoin, so we'll be doing education stuff there. I'm running personally a show called Bitcoin for Beginners. This thing is like radio, talk radio for the internet age. So you can come up, and grab a mic, come up and on the stage and ask your questions, and we'll have a back and forth. And went for 4 hours last week answering dozens and dozens of questions from beginners, and great questions. It was really inspiring, actually, to kind of go back to the days where I was a new coiner and kind of relive some of that excitement in those early months after discovering Bitcoin. We are also really putting together and rolling out, just improving the product, iterating on the product on a regular basis. Our onboarding process is getting easier and faster. Right now, our goal is to become the fastest way to Bitcoin, from zero to Bitcoin as fast as possible in the United States. And we are working on making that happen right now. I think we're on the verge of releasing an onboarding process that will accomplish just that. So that's super exciting. You can, of course, now buy instantly. We have our recurring plans that we've had since the very beginning. We also have Swan Treasury to help onboard your corporate accounts. So you can go to our email treasury@swanbitcoin.com. And of course, now we also have the wires, the bank wire funding method, which will allow you to buy much larger amounts of Bitcoin and settle a lot quicker than a bank ACH, usually within 24 hours. So you can get access to your Bitcoin, withdraw it to your wallet, buy it, withdraw it in a very short time frame, from $10,000 up to $10 million purchases. And if you need access to larger purchases than that, you can get in touch with us, and we can, through our networks, probably help you find the best way to procure that Bitcoin. So we are here for you. Bitcoin only, Bitcoin best practices, the easiest way to buy Bitcoin, safest way to buy Bitcoin here in the United States. Really hope to earn your business. Give us a look, swanbitcoin.com. Thanks for everyone for being here again tonight. We'll see you next week. Swan Signal Live is with Peter Todd, a long-time OG Bitcoin developer, been around since 2009. And Guy Swan, he's been around since 2011, host of Bitcoin Audible. And we're going to get into Bitcoin history. It's going to be a Bitcoin history lesson. It's not going to be one to miss. So I'll see you guys next week for Swan Signal Live. Take care.